Welcome, everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feed. You can also enter comments in the chat room for me to answer at a later date, and that's a new feature. So if there's anything you want to ask as a live question, let me know, and hopefully I can get to it. Otherwise, I'll answer it on the following show. Okay, so our bull market, we're still trying to hold our new all-time highs from 2 days ago. Pulled back a little bit this morning, and we're starting to try and rally. So one of the things that I'm not happy with was we've had great numbers from Microsoft, Amazon, Facebook. So really big companies, and yet the indexes are going sideways on the back of these earnings. So a little uncomfortable with that. So we're going to talk a little bit about that. And the GDP number came out today. Do not trade GDP. That number is almost, it's very hindsight looking. It's for 3 months that happened already a month ago. And the second thing about it is, it's not really where the market's at, it's where the market was. So what we want to look at now is right now we're currently testing the prior highs. And so we just want to see how the market reacts to that. So this is a pretty important place on the charts. And as Gan said, there's 3 places to look on a chart for big changes. And 2 of them, one is at the top, one is at the bottom, and the other one is anywhere in the middle. But the main point would be that if you're expecting a market reversal, it would be when you test a prior high, you want to go up and look at it and see how the market responds to that prior high. And so far, yesterday was a really wobbly day. Today's been a wobbly day with a pullback on the start. Now it's trying to rally up, and albeit the volatility isn't very high, it's still just kind of wandering around this prior high, even with great earnings out of big companies. So we're going to go into a lot of those companies and just look at their charts specifically. And then energy looks to me like it's racing lower this morning, but it's been, it made its high 3 days ago, but it just doesn't seem to have any staying power up there. I had some energy trades on and have actually taken them off. So gold actually might be starting to perk up here with bonds. And for some reason, the gold and the TLT chart are kind of moving lockstep a little bit. So we'll just keep watching that. And of course, the US dollar made an all-time high, or not an all-time high, but made a big high. Recently broke out above this 97.5 level, which I've been watching forever, and finally broke out. Now, today it's pulling back a little bit from yesterday's high and the previous day's high. So just something to watch. Okay, let's get over and go straight into the charts. So this is just a 60-minute view. And on the 60-minute view, I just have a 100-period moving average. So that's really rough, a 20-period moving average on a daily chart. And what you see here is the VIX is really kind of winding down here and is sitting right on this moving average line. And it's not a big deal, but it's a place to watch. And I guess I would just say we're starting to see, even though we're hitting these highs, we're starting to see rising lows in the VIX. And that is okay, no big deal. I think the bigger issue for me is that, we broke out to this all-time high, 2940, and then ended up pulling right back again. So, sorry, it was 2930. So as we broke out here, I think the real question I have on the markets is, can it sustain this level? And we're about to find out. So PPO is still, or in this case, the MACD, and it's fine to use either one, but on this shorter time frame. But the big thing I'm watching for here is this big lower divergence. We had lower here as well, and now we've got a second one where the momentum isn't quite as high. And the NASDAQ is still holding up. The Russell just can't get going. And here was the Russell's prior high way back in February, and we just can't seem to break through that. So in terms of breadth, what we would see is if everything is starting to carry higher, all of these markets should move up. But we're still, it's been a long time. And again, in this case, we're testing the prior high. So we continue to try and work against it and see if we can get through it. So just the fact that the Russell's underperforming isn't hugely significant, but it just says that the breadth is waning for the broader participants of the market, and the money's moving into the bigger stuff. So here's the Toronto Stock Exchange, and you can see it's testing this 20-period moving average, or 100-period moving average on the 60-minute chart. And again, I would expect Canada to break down before the US. Now, I've got some stuff about the Canadian chart that makes it a little more interesting just to check out. Here's natural gas, and this is one of the charts I actually like to the long side here. And one of the reasons for that is it just made new 2-year lows. And as it comes down and tests that 2-year low, we'll see if it starts to bounce up here. And it looks like it is trying to form a bottom. So I'd like to see it actually get above this moving average level and start to race to the upside. But to me, that's a trade I've started to put on, and I like it here. On the other hand, here's the USO, and you can see that, it's been in a relatively steady uptrend for 4 months, and this morning it's really letting go. So it's down, 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 and, we're about to make new 3-week lows here if it gets much lower. So that's quite a change. And I just noticed this is earnings season or annual meeting season, and one of the things that seems to happen in Canada for sure is the annual meetings kind of mark the top for the oil companies, and then they pull back until June, July. So I'm a little hesitant here on the oils. They just don't seem to want to go higher, even though that price is up there. Okay, here's GLD, and you can see a big downtrend on here and trying to get back above this moving average. But one of the reasons I like it here, if this was about to start surging, it might confirm that the US dollar is going to roll over, and we're going to cover that off in a little bit. The bond market's pretty important, where this TLT never did break down below support. So support would be defined. So it was resistance while we were trying to get through this 122 level. We finally broke through. And then what we would say is resistance becomes support. So it's come back. It spent 2 weeks trying to get down through this level, couldn't, and is now reversed back to the upside. It's broken a 1-month trend line to the downside, and bond prices are starting to go higher, so bond yields lower, so people starting to look for a little more protection. And so if that was going to happen, then this is an important place to monitor on the charts. And then the big picture on the US dollar, of course, is it's making these wavy highs, which is fine. The big issue is here we finally broke out, and what I've noticed on most of these breakouts is it literally runs up and then goes back to the bottom of the range. So we'll see if that's going to continue to happen. But the euro chart looks like it's finally cracking, and we'll start to see if the other ones are going to do that as well. So let's talk a little bit about the breadth chart. And one of the things that is showing up is that the NASDAQ, it's not uncommon for the NASDAQ breadth chart to not keep up with the chart. But in this case, we're significantly below. So what we have here is a high in September, and now this is our advanced decline line high on the NASDAQ, way below, and the market is actually hitting new highs here. So while you're running up there, you kind of expect, okay, you'll get your thrust to kind of push it to new highs. We didn't get that. So even on this new high, look at how we've been declining for almost 2 or 3 weeks here on the breadth. And one of the things to notice is, this is just to take a moving average, so it's a 2-week moving average. And what you see here is, on the last bounce, we didn't have any real heartbeat. I think the bigger concern for me is when we look at these charts, when you make a trend line on the advanced decline line and it starts to break to the downside, those are more significant. And again, I could have had it steeper here, but I'm trying to find a slope that is similar to kind of the previous slopes. And in this case, it's still a little bit steeper than either of these two trend lines. But the point being, if we start to roll over right here, this is quite critical because we're sitting here testing the prior high. Now, again, day's not over. We've got lots of work ahead of us. But the question I have is, with all these great earnings, why are we not getting sudden surges like Amazon had, huge numbers, and yet the chart's flat on the day? So that one's quite sticky for me. Now, we'll do the same thing for the New York Composite, and this chart's a little different. So what we see here is the New York Composite has not made higher highs yet, but the advanced decline line has. And so this is almost inverse. It's like the market's not moving as fast as the advanced decline line, which is okay and actually quite bullish. The real issue here is we have this downsloping trend line. If I drew it in here, we've been trying to break through it. And you can see for most of the month, the majority of stocks are just flat, even though the big indexes are still pushing higher. So we're not getting the lift that we would expect. And again, that doesn't mean to go shorting the world, but it does say that things are getting more cautionary. And I still come back to the fact that these net new highs, even as we're breaking out to new 52-week highs or all-time highs, we're still not getting any sort of bump in the number of stocks participating. Whereas if we go back to 2016, even if we just drew this trend line, let's pick July in here, new highs weren't made until mid-August, but this chart was clearly shooting up above this level and kind of showing I've got lots of enthusiasm for a breakout here. And so this thing was still well under its prior highs and was breaking out with lots of net new highs. So that's pretty bullish. Now, in our case over here, it's been 7 months or whatever since we had our previous market high, and real rough, that's about the same sort of timeline from, I'll call it late December. And the market was starting to surge already, even though it hadn't surpassed that point. So I don't think it's a time issue. And again, the other thing the market did was it spent a lot of time in January, and then the NASDAQ actually went on to higher highs. But what we see is a dwindling in number of net new highs. And so that just tells me that this isn't as bullish as we want it to be. Not that chart. I want to go to one more. For this New York high-low, again, the same issue is we've barely got any net new highs, and the market is on lower highs. So we haven't broken out yet, but back in 2016, literally coming off this big downslope, we started to have new 52-week highs. And it's that kind of bump that we're looking for. We want to see that sudden surge. And I thought maybe as we go through at least the prior resistance, we'd start to see some broadening out, but we're not. And lately, for the last month, we've made less and less new highs and more or lower. The ratio keeps getting lower. On the lows, there's more lows, and on the highs, there's less highs. So it's starting to puzzle me if we're actually going to have any strength to break out here, and maybe the market needs to correct a little bit before we get a better run at it. Just to briefly touch the Canadian market, and the reason is because as we hit these, we broke out to a new all-time high. We've already pulled back past the new all-time high, and this advanced decline average is getting very close to zero. We're at 19. So not really as bullish as you'd think. So as we're hitting these new highs, less and less stocks are advancing. And if we go to the high-low, we see the same issue that we see in the U.S. So even though we're hitting new highs, we're not breaking out here. And in fact, we're at -2 today. But the main concern we've got is, we're just not getting the thrust. So we had these big moves, and then as soon as they started to roll over, when you break below zero, this is an important place. So the question is, are we here and we're still going to wobble higher? And the reason I'm cautious is we see this breakout just above the prior high and then the immediate rollover as the market gets weak here. We see the same thing now where the number of net new highs is getting weak and the market rolls over. Now, the Canadian market will probably do that before the U.S. market. So I think it's just important to keep an eye a little farther north and just watch to see what's going on there. For very short-term traders, the point I want to make is, we still have, this is Alexander Elder's model with high-low 5, just a 5-period moving average. And that's holding up okay. You're still in positive territory. Again, the problem I have is you're just not getting this big kind of thrust that relates to major advances. And so it's, we've moved up really, really well. The real problem is just not a lot of stocks on any given day kind of getting the surge that we'd need. So I want to look in on this McClellan oscillator again. What we see here is a couple of different phrases. So here is this is April 25th, but looking back in 2016 with the sudden surge off the lows, and you can see the market down here in the bottom, we had this pullback in momentum, and then it restarted and then came off this high. And the point I would make is just as you come off these extreme highs, the market may not go down, but it may not go up either. And so we're sitting in kind of the similar place to both of those. Normally, the market doesn't have big drops until it gets below 400. And as you can see here, the market basically was weakening for a couple of months before it actually let go. And when it got down near this 400, this wasn't a bad place to look. I think the actual breakdown started a little bit lower, like down in the, I think Tom McClellan recorded it as 134. Anyway, so these are, we're starting to see the same sort of pattern that the market just might be running out of advancement energy and might just need time to consolidate before making another new high. So let's go look just on a bigger picture. This is the summation index shown as a Renko chart, and what you or as a weekly candlestick chart. And what you see here is these sudden surges and then a pullback and a sudden surge. This is the 09 low, and it was these pullbacks that are harder to trade. But in this case, there was this pullback off a very high level, and it actually wobbled a bit. Right up in there, you can see the wobble and then pulled back. Well, this pullback generated roughly a 10% drop in the market. So while that wouldn't be major if you're a long-term holder, it's still a place to just recognize we might be heading for a period of weakness. My bigger concern is it's on the right side of this, third lower high or second lower high on the New York Composite. So anyway, enough about breadth. I'm just saying it's starting to look a little like it's struggling, and especially with these breakouts to new highs, why are we seeing that? Okay, next chart list. So this is just a group of stocks that have, or things that I want to look at here briefly. But what you see is as we look through these stocks, Ford had a great number, so it's up 10% today. And, we've got Pinterest still doing well. But for the most part, considering how big these names are and some of the euphoria around them, we're not getting a lot of bump considering where we are in the market right now. So let's just go look at these on a 10 per page basis. And the point I would make is here's Russell, small cap, and again, just grinding sideways. It's up slightly from yesterday, but still down from 2 days ago. We've got a little lower momentum here, and we need to watch and see if that can start to perk up. That I've already talked about it, so we'll kind of roll on. But Apple seems to be rolling over here, even as these other good names report. So just keep watching that trend line, and I think if that starts to crack, that would probably add to the pressure. So here's Advanced Micro Devices, and it's been grinding its way higher, but lately it's made a lower high, kind of 3 weeks, and now we seem to be testing the bottom of the 1 month range. So just a semiconductor, I had heard Kramer talk about it, and I just thought, it's a good one to go look at, but Xilinx had a brutal day yesterday, and so we're starting to see some of these big names break down, and it's falling farther again today. So here's Amazon after reporting a great number, giving us an outside bar already. So opened higher, pushed higher, and is now living on the bottom third of the range. We'll have to watch to see where that wants to close. I mean, the numbers were fantastic, so it's hard to imagine that the stock's going to get weak. Here's Caterpillar, and you'll notice a week ago it kind of made its high and continues to manage this downward slope, the same sort of slope we see on the New York Composite. So the question is, what's going to win here, this uptrend, or are we going to stall at the prior highs or the trend of the prior highs? This is a really nice move in Ford, and we've been talking about a bit lately that Ford's been showing some relative strength compared to the rest of the industry. And it needed to get through this 950 level. Well, sure enough, right at 950, it's launched to a new high and taken off. So it really looks good. But again, let's not get too excited about the autos. The whole sector seems to be mired in mud. And if we unwind the charts, lots of them look like they're sideways only. Gold is starting to show up on my radar only for one reason, and that is that after being well below the 200-day for a long time, it's rallied up, and now after a series of pullbacks and checks, and this recent one was kind of a 3-month low, it's testing the 200-day moving average. And so if it was going to start to bounce, perhaps this is the area where you might see it. And again, that would depend on the US dollar breaking down. So I want to keep watching gold here, as bad as it sounds. There's an overriding theme, and maybe I should just go get that. GLD on a bigger picture. And the reason I want to show you this is we have a momentum wave that's taken us above zero. If it comes down and touches zero or near zero and starts to take off, that is your start of a bull market. So that's what we'd want to see. And even as it rocked through here, it had these little small moves. Now, the real question is, if you think the US dollar is going to race higher, this is probably going to be a difficult trade. The bigger issue would be, if it has this pullback and starts to go, this is the time to get on board. And the other thing to recognize is when the market got weak in September, October, December, November, December, that gold was rising through that period. So perhaps it might be an alternative play. I don't really like it from that perspective, but I like it more just from the pattern of bouncing off the 200 with positive momentum pulling back slightly. So getting back to our just different charts to roll through here. General Motors, I looked over to see if it's having any reaction to the Ford news. Absolutely none. So this 40 level here, pretty much glue in the sand for GM, and it looks like the PPO wants to roll over with a lower high. Not that great. Grubhub was interesting because it reported big numbers, but it was a huge spike off the open today, and it kind of did the same thing last night where on the news it shot up and then it went negative. And so today it's had the same sort of response. But I think, it's trying to break this downsloping trend. And again, very competitive industry and lots going on around it. There is a little bit of positive divergence where it's starting to make higher lows in momentum as it's making the same sort of lows in price. So this is a little bit more positive. I still don't think I'm a buyer, but it was just interesting because it reported Honda Motor Company just checking if the yen is going to strengthen or weaken. We might see it here. And this is just struggling with its 200-day moving average. So if it could start to get going, that might be a little more positive. Looking in on Intel Corp, obviously bad number. And we had the same thing from Xilinx, which is very concerning. So these huge gap downs, this thing took out not only its prior high, but dropped down to new 2-month lows. And it's trying to hold at a real rough support and resistance layer. I might say it's a little closer to 50, but this thing doesn't look like it has much support here. So I think you might have another few days to let it settle down. Let me just finish that Xilinx chart while we're here. The point I want to make on Xilinx is, wiped out 2 or 3 months of gains here, got all the way down to the start of the year. So it's at its lowest level this year. And, the PPO doesn't look great. Now it might bottom here and hold here for a while, but it definitely looks like the euphoria is off it. And I don't like the fact that it broke through this uptrend in relative strength. So that's a big negative for me. Okay, getting down to Lyft, this was an IPO, and we've heard that Uber is going to IPO right away here. It would not surprise me to find that Lyft bottoms out as Uber IPOs. Just kind of while the market is paying attention to the other side, this chart might actually start to get some lift in the name. And it's had a 5-wave down, so we'll just see if that matters. Okay, here's Microsoft. Big gap up on earnings yesterday and holding in there, but so far an inside bar or indecision. It just, again, I would kind of expect with the bang up earnings we had out of Facebook and Microsoft that all of these charts would keep running, and they just that Microsoft chart is by far the best. Love that one. But here's Netflix, and again, just sitting here holding under 380. It's been one of the bigger growth stocks, but it hasn't done anything for a year, so it really needs to get going here if it's going to get going at all. And otherwise, I'd be more concerned that it actually starts to lose interest as we get to Pinterest. So here's Pinterest, and again, just opened here at $19, gapped up to 23, and every day it's making a little slightly higher high. So that is very bullish. Got to like the shape of that chart. For an IPO, usually what I'd like to do is watch it come back down and then try to buy it on some sort of a dip coming around after the original euphoria is off it. Starbucks, big uptrend here. And again, they had good numbers yesterday, but just trading in line with a big outside bar. So want to watch and see what happens here. But until it breaks down, I mean, it still looks good. But it is one of those rare questions where, you know, as an example, all of the good numbers we had last night in the composite is still down this morning so far. Square has been a big payment processor, and those charts have looked good, but it's struggling to stay above its 200-day moving average here, which is a bit of a surprise. And again, remember, the market's moved on to all-time highs, and this stock is now making lower highs, so that's quite odd. Toyota Motor, again, we had put Honda Motor up earlier, and again, just to watch and see what the cars are doing. And I think, you know, this gap up, and this looks a little bit like an island high here. So it really needs to kind of hold the 200-day. I don't want to see it roll over here. That would kind of just say that this resistance at 126 held. And this is the US dollar. And the point I will make on this US dollar, so here's 25.40, and we briefly shot through it and then came back down and then did nothing for months. And then here we briefly shot through it and did nothing for months. And here we briefly shot through it, did nothing for weeks, briefly shot through it, fell down again. And now we've shot through it again. So I'm happy that the US dollar is at least breaking out one way or the other, because it's been mired sideways for the most part. But this drifting uptrend is better. And I think the bigger issue here is if we start to see this roll over and then we start to see gold accelerate, that could be a big, big issue. So one of the charts I do want to talk about is XLI, and this is the US industrials, obviously. But what you see is this prior high is just like glue so far. We have not been able to break through this 79 level, anything meaningful. And yesterday's 3M gap down was just very difficult to see. Bang, down it went. And, you know, we're not getting much of a bounce today. So important to watch. We've got negative divergence showing up on the momentum here. So we have a higher high in price and a much lower high in momentum. So if it was kind of up here in the same range, that would be fine, or up here in the same range, even that would be okay. You have to wait until it starts to break down. But this is a very significant lower high. And I would be much more concerned that with that level of euphoria waning, to be really cautious, especially as we get to this prior level. Okay, one of the other charts I wouldn't mind covering off, I'm just going to jump in here and go to XLF. And the reason for that is we have the Fed meeting next week. And what does the market want to do here? And it's stuck right at this resistance level. And so really important to see which way this chart wants to flex. I think it's more important, if it's not going to hold here, we just want to let it be very careful, because if the Fed starts to show any sort of aggression, I don't know which way this chart will move. As the market moves to new highs and everything else is in place, unemployment and all that kind of stuff, and a big GDP number, you could start to see the Fed, I'll call it, get a little more aggressive, or at least tighten the tone. I don't have a feel for it. But again, the financials have been sideways here. And after breaking this downward trend line, well, let's just draw it on there. After breaking this downward trend line, coming across the chart here, I don't know, is it better there? I kind of had it here before, but let's just leave it on the extreme highs. So coming into this Fed meeting next week, it's going to make for a pretty hard place. So that's it. Thank you for taking the time to join me on Market Buzz.